For those who just logged on, thank you so much for joining us today. My name is Dominique and I have the rest of the Greenleaf team here with us. And today we'll be discussing Taco John's, specifically a drive-through retail opportunity located in Princeton, Kentucky. So before we get started, we always like to remind everyone Greenleaf's mission in Greenleaf Connect. We host weekly live streams and private Connect events every Thursday afternoon with a new topic every week that highlights a portion of our business. Private Connect events are more interactive, while live streams are open to the public. All right, folks, today we will be specifically discussing the Taco John's brand, and then we will dive into the opportunity as a whole. And as always, we have that question and answer at the very end to answer any questions that you may have. So before we begin, we like to always remind everyone with some rules of engagement. First, you do have the option to change your presentation view. You can change it to speaker spotlight view, or you can click and drag to make the presentation or our panelists bigger or smaller. Again, folks, as I mentioned, we will have that question and answer segment at the very end. Feel free to use the Q&A feature located at the bottom of your screen under the reactions button, and we will use that to facilitate the conversation. This is a friendly reminder that this live stream is recorded and will be shared with you by the end of the week this week. All right, without further ado, I will pass it over to our hosts, Andrew and Dave, and we have a fun opener for you all today. All right.
Hey, Coach, you going to the fundraiser lunch?
No can do, Jenny, because Taco Tuesday, which means old Coach gets tacos. And what day is today? Tuesday.
I'll let her know.
Jenny,
Yeah.
Ole the day.
Okay.
Save on beef tacos every Taco Tuesday. Ole the day at Taco John's.
His relationship with that taco is a little.
Hey, Coach.
He's committed to that taco. Yes.
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 All right, so thank you, Dominique. Everyone, that was just a quick introduction to what Taco John's looks like. As we've evolved our retail business over the past 3 years, we've really honed in on different brands that we want to be part of. And even within the brand, we're looking at specific operators within that brand. So on a bunch of our other live streams we've done, we've talked about Dollar General, they're corporately owned, but we've talked about Zaxby's and the relationship we have with the operator there in similar situation that we're going into here with Taco John's.
And also Applebee's. We have a good relationship with an Applebee's operator, which we've purchased and exited already too. And but then we have that's coming up too, but that'll be another day.
Jumping ahead.
Jumping ahead.
But
Yes.
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 Yeah, so the retail strategy is very much focused around brands that have growth strategies and these strong operators that operate within those brands. So here at Taco John's, this brand, the Taco Tuesday, they've had that for
They trademarked Taco Tuesday, and if you look all over the internet, you'll see that there's always. Remember how we talked about how DQ licensed the soft serve cone. Then we had some people disagree with us about this, but from what we know, the trademark for Taco Tuesday is a trademark by Taco John's.
Yeah, and they've had it for 30 years.
Yes, they've had it for a long time.
They've had that for a while. Recently, I mean, this has been a strong kind of mid-tier brand because you're looking at about 400 stores right now. When we think about Zaxby's has 900, so Zaxby's is twice the size of Taco John's. But this brand is looking to grow from 400 up to 800. And part of that requirement is that you need to have strong operators help get you there. Taco John's is not operating themselves. It's a franchise model. So that's where relationships with the strong operators are really critical in being able to buy in and experience that growth with the franchise.
Right. And one thing that's very important for this particular brand is this particular brand has done intelligent growth. They haven't gone crazy. They've done methodical growth of actually figuring out, okay, which markets do we need to be in and do the expansion from there. Whereas, honestly, Dollar General has done crazy expansion, and Taco John's, I would say, is a little bit more thoughtful, and they're going into markets intentionally that they're actually known as a brand. So gradually, what you'll see is Taco John's footprint getting bigger in its markets. And eventually, in Atlanta, I'm assuming over the next 5 years, we might see a Taco John's.
Yeah, they're in 22 states right now. And and they're looking to open 55 stores in the next 2 years. The operator we're partnering with on this deal is one of those. They have 9 stores. So jump into kind of, these are the 2 guys that they are our operators of
Okay.
Taco John.
And what's the first thing you noticed about our operators?
What about them?
Well, look at the guy's arms.
So, so Matt and Brad, they have 9 stores right now.
That's
Yeah.
Matt is on the right.
Matt is in blue shirt.
And then
Brad is in the gray shirt.
Brad is on the gray shirt, yes,
So-
yes.
And one of the things we like about these guys when they're operating their Taco John's restaurants, very similar to our foundation that we have here at Greenleaf. Our foundation is very much focused on improving the lives of our residents. We've done food drives with them. We've done back to school programs with them. We do our farming initiative to get residents to talk to one another. Here, Matt and Brad came up with a program where basically senior citizens that needed a good meal could come to Taco Tuesday,
Taco John.
they can come on any day,
Any day,
but they
yes,
could come to
yes.
Taco John's and they could get a free meal. So that's one of their big ways that they're able to give back to the communities they serve. And to us, working with people that have an aligned vision in some of the same values is very important.
Well, and in addition to their philanthropic needs, I mean, ultimately it is a business, and this is going to be a business we purchased with a brand new 15-year lease with 4 or 5-year options. So this is a very, very long-term lease that will be very, very marketable in the
Yeah.
future.
Yeah, this will be the longest lease we have for any tenant in any segment at Greenleaf.
Well, and also too, the 1.5% annual increases, I think those are pretty much the largest triple net increases we have every year in a lease too.
Yeah.
So that was a good.
Yeah, a
that
lot of the
was good
times we'll have like every 5 years it goes up.
call. Every 5 years or 1% a
1%
year.
a year.
Yeah, so.
Yeah. So yeah, so this is the Taco John's, the specifics on this location as a whole. And we noted there too that lease term of 15 years is really a big driving point.
So purchase price, 1.5 million for the property. It's not a big footprint property. It's 2,100 square foot, which makes the price per square foot go up a little bit. We're buying it actually at a 7 cap with the 1.5% increases every year. On year 3, the cap rate will be 7.21, and this is an absolute triple net lease, which means we are just managing a mortgage and we're managing rent payment and very little, because we have no responsibility on this lease whatsoever. They're responsible for HVAC, building, all the maintenance, parking lot, and we have nothing. And we're targeting a hold of about 3 years, because what we like to do is sell this with some lease term left on it, because the more lease term we can sell it with, the higher value it will be, and we'll show you this on the comps.
Yeah, and the whole part around having a strong operator that they're committing to the spot for 15 years too.
Yes.
So they're very much bought into what they're doing here.
Oh, and they are signing personal guarantee for the 15-year lease. So they are on the hook personally for the 15-year lease, which is good. That shows their confidence in the actual business. And as well, we have some backing in the lease too.
All right. So kind of where is this location? This is right off of the main highway. It's north of Nashville. When you get off the highway, it's one of those locations where you see, I guess there's Captain D's there too. We haven't looked at that, but we've got Dollar Tree, McDonald's, Taco Bell, Captain D's, and Walmart right down the street. So it's a big retail strip right there.
Right, they call it a prime. It's basically in a prime trade area.
And then all of our recent deals, we've really been looking at this Placer AI foot traffic information, trying to make our decisions based as much on data as possible.
Right. So the next slide actually talks a little bit about Placer data and how the store ranks in the United States. So if you look at on the left-hand chart, this Taco John's is actually ranked 51st out of 300 stores in the United States. It's the first, the busiest store in Kentucky based on foot traffic. And then there's actually a Taco Bell across the street, which is arguably its biggest competitor. However, I've heard Taco John's called the fancy Taco Bell. So their menu is a little bit bigger and nicer. And just even across the street, this has 33% more foot traffic than the Taco Bell literally across the street. So if there's a preference at restaurants, you can see there's a clear preference even in the local area.
And that foot traffic data, that helps us so much in being able to really quantify, like, hey, what is actually happening?
Yes.
So we can see that this is a top performing store. It's better than 80% of all the other Taco John's, coupled with the lease terms that we're getting. feel very confident about the decision of the investment.
But what's even better than foot traffic?
Sales.
Sales. So we know.
Actual dollar, like
Actual
real dollars
dollars.
in the door.
So
Yeah.
this is a great opportunity because we actually know it's a top performing in foot traffic. It's also a top performer in sales. So if you look at the growth, the yearly sales growth chart, it's phenomenal. We don't have 2021 finished yet, but my anticipation is 2021 will be even or maybe a little bit above 2020. But you could just see the progression of 2017 to 2021, and sales are going up every year. And it meets all the metrics. So our rent is going to be roughly about 8% of sales, which is an industry metric. And so it'll be right on par with their sales, be very affordable and in fact, if it's less than 8%, it's kind of cheap to them.
So let's think about that a little bit. So this 8% rent to sales number, right? So we've looked at retail deals where it's over 10% or somewhere it's 5%.
And that's concerning. It's concerning when it's over 10%.
When it's over 10%,
Yeah.
right?
Yeah.
Because that means the tenant is spending too much of their income on rent.
And they're going to come to us one day and say, hey, we need a rent discount. We don't want to hear that from a tenant because.
Yes, we want them to make lots of money, so the rent becomes as cheap as possible.
Right. In fact, it's counterintuitive. We want the restaurant operator to believe their rent is cheap, and we want their rent to be cheap. So it's counterintuitive because if the rent is too expensive, they start scratching their head of whether it's worth it anymore. It's a little different.
Yeah.
Okay.
All right, so if we think about this Taco John's, we compare that to other sales and lease comparables. So here, you see we're at the top here, this Princeton, Kentucky location with it's a white leaf, but with the Greenleaf logo next to it there. We look at the average cap rate of recent transactions is below 6%. So
Right.
5.81 is, and we've seen this in a lot of asset classes too, just really, really compressed cap rates that are coming down. But here, we're at 7%. We're on the high end of what's out there right now.
And so we have a lot of room for figuring out what our exit strategy is here. So if we could actually sell at that 5.81 or even 6, it's a home run and it's just a great deal.
Yeah.
And the reason we've done this is because of our relationship with the franchise and the operator, and also we're going to develop a relationship with Taco John. So we're going to know how to do this again and again. So that's the hope.
Okay, so if we go with the investment overview as a whole, so like we mentioned, we're buying it for $1.5 million. And it does have those 1.5% annual increases. It is our longest lease, so it's 15 years.
Longest lease in the Greenleaf system
It's
forever.
the longest, yes.
Yes.
And then we're always looking at our year one, what's it going to be year one, what's it going to be at the next inflection point. And we picked year 3 in this one. Typically, we're looking at year 5. But in this deal, we wanted to really make sure we kind of do a capital assessment at year 3, because at that point, we still have a lot of term left on the lease.
Right. And the more term you have, of course, the lower the cap rate is going to be, the higher the sale price.
So we've got an annual cash on cash meeting the pref of 6% year 1. So it's going to meet distributions first quarter.
Right. And so, so it's very important that the quarter after closing, everybody is going to get their check. And then the checks will continue to come until we close. So this is not a deal where we're not distributing for a while. Literally, the quarter after closing, everybody will get their first check.
And we have our total investment returns at 12% and 13%, which includes our principal payment over the time of the holding.
And then that 13% just reflects cash flow. So we haven't got into the actual exit.
Correct. Yeah, that would be 12% in year 1 if we're simply holding it, or 13% in year 3, just holding it, not including a sale. We're not talking about IRR. That's pure like cash that we're earning and paying down in principal. So cash flow, the actual cash flow. So now when we take a look at, if we do throw in an exit price on there, we mentioned that 5.81% was the average.
Right. So this is a really important slide because if you look at it, we model, just to be very conservative, we modeled the 6.25 exit. And with that 6.25 exit, we're at a 14% IRR.
Yeah.
That's pretty good.
That's good. That's right in we're looking for like 12 to 15% when we look at an IRR number on a percentage return.
Yeah.
And we're looking for that 6 to 9%
Look
cash on cash.
Look what happens when we go to the 6% cap rate sale. We're basically at 20% IRR. And if we can get below that, I mean, it's as good as it gets.
And that's exactly what we just did on our Applebee's.
Yes, yes.
our Applebee's. Oh man, now I gotta go into
It was
specific
a-
dates.
it
So we
was a-
purchased it 2.5 years ago.
We purchased it a year before we sold it. So we purchased it like just before
Two.
COVID. No, I'm sorry. So that was, oh my God, COVID's been around.
I know. Yeah.
It's like a year and a half now.
So
Okay,
we
so
have.
we literally purchased right before COVID, and then we sold it in Q1 of this year. And our internal rate of return, I believe it was around 25% just for that year hold, because the cap rates literally went from 7.5% to 6.5% in that year. And of all things, an Applebee's was a really premium asset to buy at that
Yeah.
point in time.
And it had good location. good place
Excellent.
to be.
It was
So,
excellent location, as good as it gets.
yeah. So that worked really well on this cap rate compression. We were able to realize that on that exit, it really drove our IRR upwards. So here we see, a potential, this year zero, $100,000 theoretical investment and the cash flows that it's producing each year out. If we were to exit in year 3 at this 6.25% cap rate, that's where you see that $133,000 cash flow. It includes the profits from that sale. All right.
So the summary of the deal. So basically, the reason we like this deal is, number one, we've got 3 great points on this deal. First of all, it's a 15-year lease. 15-year leases, or when we sell it, hopefully a 13 or a 12-year lease,
Yeah,
they're going to hopefully sell
still
in that.
very long
If
way.
we sell in 5s, we're going to do absolutely great. This is definitely one of the top performers inside the Taco John system, and even in the local system. We could actually see it's beating the local Taco Bell. And then also our operator, which we talked a little bit about at the start, but they're expanding. They're a young operator within Taco John's. In fact, they are getting this Taco John's because they went to these operators and said, hey, this Taco John's operator wants to sell. Do you want to buy? So Taco John's is actually coming to these people saying, hey, please buy our Taco John's over here. So
Yeah.
as good as it
And
gets.
their values are similar with what they're doing to give back to the community.
Yeah, they're 2 great guys. Been dealing with them for months now.
Yeah.
Great guys.
All right, we're gonna turn it over to Dominique now. We're gonna go through a little bit of the timeline on what this deal looks like. Things are moving along with it, and then we'll go into the Q&A.
Yes, thank you, Dave and Andrew. As always, we like to leave you with some upcoming dates, specifically for Taco John's, Princeton, Kentucky. For those who have submitted your investment interest with us, your subscription will become available to you on October 29th. And we ask for your subscription agreement as well as funds due by November 16th, all to prepare for closing on November 29th. Well, we will go ahead and dive into our Q&A portion of this broadcast. So I will pass it over to Natalie.
Thank you, Dominique. And thank you to everyone who submitted questions. We also want to remind you that you can continue to use the Q&A feature at the bottom of your screen to submit questions as we work through those that have come through so far. We'll dive right in with our first question being about the operator. What is the background of the operator, and remind us if he or she is personally guaranteeing the lease?
I mean, so they are personally guaranteeing the lease. They currently have 9 Taco John stores. So this will be their 10th.
This will be their 10th, correct?
Yeah, this will be
Yes.
their 10th
Yes.
one. This is their full-time, their full-time
Right,
business
but
is
also,
operating these restaurants.
these were 2 guys with nice paying full-time jobs before, and they decided, hey, I'm going to quit my nice paying full-time job and I'm
Yeah,
going to start
do this.
and do this and start buying Taco John's. And they've done it. They've done very well. This will be their 10th purchase. And I will say, as far as character and what they do, as far as giving away senior meals
Yeah.
in COVID, I just think it's right in line with what we do. And it's right in line with what we actually do inside Greenleaf too. So.
Okay, the next question, I'll actually take it, is what is the traffic flow for this location? And so the traffic count is actually 10,159 vehicles per day at this location. Next question, can you review the lease terms with us again?
Sure.
So beyond the points of like, it's 15 years. Every year from when we sign the lease, there's a 1.5% escalation. So this lease, starting in the 4th quarter, every 4th quarter, we have a 1.5% increase. And then it's a true triple net. There's a little bit of gray area between like, is it full service or triple net? Sometimes we're responsible for doing a roof or a parking lot or curbs or stuff like that. This one is truly, we do not have any operating expenses. So it's very much a lease term. We don't have anything that we're operating within this. So we're just managing the rental payments and making sure we keep track of the 1.5% increases each year.
Right, and the footprint inside Greenleaf makes it easier for us to do this, and it's the cash flow is predictable as it gets. So that's the biggest advantage of these deals.
And our last question, can you review the debt terms?
Debt terms of this, we're going to go with a bank, Farmers Bank and Trust out of Kentucky. They actually competed for this deal. We got great terms on it. We got 3.39% debt with a 5-year term on it and a 75% loan to value. And oh, I didn't tell you this. We were approved for the loan, I think just yesterday. Just so you know. So we got our final approval, and so we're all set to go.
Every time we're kind of working through a deal, we go to a couple different banks to see what are the best options look like. And then we're essentially renegotiating all of those bank terms, just like we are when we negotiate on the purchase of a deal. So we go through all the bank negotiations, and then that goes back to reviews with committees. So even though we take a deal from day one, our bank approval normally comes about 2/3 of the way through the full deal cycle, and then
Right.
the last third is actually closing the deal.
And also with this one, typically we're getting about 3.5% on our deal. So we did 11 basis points better on this deal by getting 3.39%. So we even did a little bit better. And the LTV at 75% is phenomenal. So that's a really high LTV.
Wonderful. Well, those are all the questions we have. Again, we want to thank everyone for participating. And of course, we want to thank our hosts, Dave and Andrew, for sharing the details of our new Taco John's deal. As we wrap this up, we'll pitch this back over to Dominique to review our live stream schedule and upcoming dates.
Yes, again, this concludes our regularly scheduled program, but we do want to leave you with some upcoming dates, specifically on Greenleaf Connect. So we just discussed the Taco John's opportunity. We do have on the books our end of quarter reviews for our commercial and residential portfolios. Those will be conducted on October 27th. And the day right after, we will be doing, Andrew gave everyone a sneak preview. We'll be doing a new deal overview for Applebee's located in Seneca, South Carolina. Again, folks, we do have an upcoming industrial offering coming to you all, and named Covington Flex. That one should be coming to you fairly soon. And again, we do have that Build Back Better Act and IRA provisions live stream in the queue for whenever we have further details to share to investors for. All right, before we wrap up, this is a friendly reminder that Greenleaf is hosting our annual Greenleaf Investor Forum, November 3rd and 4th. So this is a friendly reminder to reserve your spot today. Registration opens and it will continue to be remained open until October 27th. And again, folks, if you're in the area and can't attend during the day events, we welcome you to attend our welcome dinner, which will start at 6:30
On Thursday night.
That will be Wednesday night.
Wednesday night.
And then the next day, Thursday night, we've got so much fun all together for you folks. So a little bit of a date merge there. But Thursday, we do have our evening reception where we will have virtual reality. We will have live music and a wonderful dinner. And we will be hosting that here at our corporate office. So we invite all to come. All right, folks, thank you so much for joining us today. This does conclude our broadcast. This is a friendly reminder that this live stream was recorded and will be shared with you by the end of the week this week. We encourage you to go on our Greenleaf Connect YouTube channel to access all of our live streams. And this concludes our broadcast. We hope you have a great day and we'll see you next time.